Hey guys, today I'm going to discuss about an aspect of trading which is for me one of the most important thing, but then I've seen many people really not giving much significance to this, and that is a thing called trading plan. Now, why a trading plan is important? Let us see. So one of the most essential element of it's one of the most essential element of the trading game. It tells on the following as to when you should have uh, the entry, when you should exit, how you should manage your money. So all these things gets properly defined if you are having a proper trading plan in place. So it is essentially a guide that tells how to navigate through the uncertainty and randomness of the stock market. And if one does not have a trading plan, for me, one shall not trade. So, what are the basic elements of a trading plan? So, essentially, there are five. The first one is identifying the stocks to trade. So, one has to develop a standard methodology for identifying stocks. One has to question what's the time horizon one is looking for. So if one is a day trader, if you are a day trader, then you should focus more on the stocks in news. That is ideally what one follows, but that doesn't stop you from really tracking on the stocks that is not in the news. But generally, it is seen that the day traders are more aligned towards those set of stocks which are in news. And for long term investors, they should be focusing more on stocks which are developing new business models, right? So that's where the focus is. So you need to understand what sort of a trader you are, and basis that you should determine the time horizon. And you have to identify the stocks which has the highest probability of profitability. So that is the first element, identifying stocks to trade. Then the second one is setting targets for profit. So one has to be realistic about the profit target. You should be looking for the key support and resistance level, and you need to be very honest at this juncture, as else unrealistic targets would lead to frustration. So it's very important that you really understand what's the realistic target. If the stock is not having that sort of a potential run which you would uh, expect to run, but then the realities are quite different, then you should stand with the realities and not what your expectation is, right? The third is setting the stop loss amount. So before you get in a trade, you need to know how much you are willing to risk. So this is the worst case scenario for how much money you are willing to lose. So you need to understand till what extent you are comfortable if the trade goes against your directional judgment, and what's the maximum amount of loss that you can possibly take without much of a challenge at your end, right? The third is if The fourth one is setting goals. So you need to define how much you intend to make on a weekly, monthly, and yearly basis. So it shall align with your profit targets and trading habits. Just like any business, there has to be a goal which you would ideally like to achieve, and you have to break it down into weekly, monthly, and yearly goals, and then set your trade, set the set of stocks that you are following basis the profit targets that you are trying to achieve, right? And the last and the most important one, I should say, which is the one which is the most overlooked, is the reviewing of the trades. So you should review your log of trades. This to compare how well you have executed against your overall trading strategy and goals. Did you follow all of your rules? How well are you tracking against your weekly, monthly, and yearly goals? So this review process will keep you honest, right? So these are the five factors of the elements of a basic trading plan. So as we have discussed on the significance and the elements of a basic trading plan, just to reiterate again: identifying stocks to trade, setting targets for profit, setting stop loss amounts, setting the goals, and reviewing of trades. These are the most important pillars of a trading plan. So I hope it adds value to you. and we'll see you in the next video. Thanks a lot.